All right, welcome into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for tuning us in today. If you've been with us all day, that's even better, right? The only problem is today the prices really aren't I guess if you're a producer, I have to pre-apologize, but I come from a producer family, so I don't like to see down days. So I guess unless you're a cotton producer today, this is going to be a little bit of an uncomfortable board. Let's get to it. Now we're at the halfway point. We're finishing the halfway, so let's see what the second half is going to bring us. All right, we're a little easier here across the board. 6 1/4 cents lower, and that is D. Sets up front. 468.5 is last. We're a tick off the low of the day. That's no good, is it? We've had about a 7-cent range, but we're tick off the low of a 7-cent range. That explains it all. That's D's scoring 468.5. Soybeans, let's go to the Jan. That's down 18.5. Well, looks like the weather might have changed for us a little bit. We'll see if that comes to fruition over the weekend, but right now it's easier. 18.5 cents lower. 13.41 3/4 is last. We're just over 2 cents off the lows and 20 cents off the highs. How about that? All right, that'll give you an idea exactly how we've been trading there. We're 17.5 cents lower in the March, right behind it. 13.57.5 is last there. How about Chicago wheat? You ask, Chicago wheat you get. That's off 3.5 cents up front. We're off between 3.5 and 5 cents across the board there. We're 3.5 cents lower in D's. Right now it's right at 5.50. Just ticked higher there. We're about 3.5 cents off the low of the day, and 6.5 to 7 cents off of the highs. So that'll give you an idea about where we sit in that range. That's Chicago wheat. Let's go to Kansas City and see what that hard red's got in store for us. D's is down 12 1/4 cents to 6.15, 6.15. It's a penny and a quarter off the lows and 14 and a bit off the highs. So there you go. That's another one that's trading towards the low end of the day. March off 11 1/4 cents to 6.24 3/4 right behind it. Spring wheat in Minneapolis, from Kansas City to Minneapolis. 10.5 cents lower up front there. That's D. 7.15.5 is last. A penny off the lows, and that's 12 cents from the highs. There you go, folks. Or 8 cents lower in the March. Not quite as bad right behind it to 7.32.5. And then finally, this is the only up board, right? Cotton. Last we checked, it was up. It's still up 60 points to 79.28. And that's only 13 points from the high, and we're about 100 points off the lows. All right. Let's bring in our next guest analyst in, and that's going to be Joe Lardy. If it's Friday, it's Joe Lardy Day. Thanks for coming on and spending some time with us here, Joe. I know you're busy on a Friday. Is the weather going to be a little bit better down south? Is that what this is all about?
You know, it's just one of those things, Scott, where I think these markets are looking to feed the bull, right? And we got the big rally on Monday, and the rest of the week, we've just kind of chopped it all away. I mean, when you look at the prices last Friday to where we are today, beans are about the exact same spot. Corn's just a little bit better, but what do we got to trade? You know, we're coming into the holidays. The markets just kind of feel a little bit tired, and there really isn't anything overly huge to feed that bull.
Yeah, that's what I've said. I mean, look, we had the last WASD last Thursday, so it's basically a week away, right? So, so that, that puts us like 50 to 55 days away from our next decent number, because the throwaway, we have a throwaway report in December, so that really doesn't count. That we're going to get the end of the year stuff in January. So that's what I've been saying. How are we going to feed this bull every day for 50 to 55 days, number one? And then number two, Joe, is we're higher because of the weather was deemed bad down south. Now, it has to continue to get worse to feed that bull. But if it does show any improvement, this is what happens.
Yeah, absolutely. We've said all along, you got to start watching South America, especially for the next 60 days. That's really going to be the big price driver for our markets, unless we get some surprise, out of nowhere. But most likely the biggest input's going to be South American weather. And we're coming into that point of the year, like you said, when we've got 2 months before we get anything that's material from the USDA to trade. And so, fingers crossed that these markets can just hold together a little bit in here.
We've heard that, again, the hybrids won this year. There's better yields than expected. And do producers have a lot of stuff still lying around? And if they do, what do you have them do with it?
I think there's a decent amount of product out there. There's definitely additional storage space on farm. And I think right now the farmers are in a pretty good cash position. And so I think it's going to take a good rally to really start prying this late stuff out of their hands. And I think, that can be a decent plan. Hang on to it, optimize your storage space. And when the market gives you the opportunities, reward the market for handing you a gift.
This time is a little bit different because we have higher interest rates, don't we?
Yeah, most definitely. That's one big thing that a lot of operations haven't factored in, but it's there.
And that's going to be something that's going to play for, and I don't think they're coming down anytime soon, but,
No,
maybe they do a
doesn't
little
look
bit,
like
but yeah. And your operating loans have changed too. So
Yep.
while there might be a little bit of black in those P&L sheets this year, it means you're going to have to be extra efficient, I think, next year, right?
Yep, next year for sure.
Yeah, that's one of something. And they're going to have to give a guy like you a call, right? You can walk them all through it and make sure everything's
We'll
okay.
help them navigate.
There you go. All right. Really appreciate you coming on a Friday. I know you're busy. Thank you very much. Joe Lardy, he's with CHS up at Edinburgh Grove Heights, Minnesota. I used to be a Minnesota guy. We're going to go away. We're going to pay some bills. We're going to come back and talk more livestock with me after this. All right, welcome back in. Let's talk some livestock. Our four-legged friends, the meats, the proteins, whatever you want to call them. Let's bring them up. I've got that live cattle board. And for as bad as the top half was with the grains, the livestock are a little bit better here, right? Deese is up 90 cents. We're going to take it, right? And we're up between 90 cents and $1.32 across the board here. Deese stands at 175.65, and that's pretty much in the middle of the day's range right now, right? We've had, just over $2 range, $2.30 range. Now we're up 85 cents, but 175.60 is last in Deese live cattle. Now you go 1 month out, we're up $1.27 to 176.60, and that's only 80 cents off the high of the day. All right, well, not only, but getting a little bit better. That's live cattle. All right, let's move on to see what we've got going on in feeders. They too are a little bit better here. We're starting the Jan. That's up $1.10 to 228.60. And that's about what, $1.10 off of the high of the day, well off the lows though. So we're doing a little bit better there. And we've had a decent range of like $4, right? So that'll give you an idea about what's been happening there. $1.20 higher in the March, right behind it to 231.30. Let's ask ourselves what the hogs are doing. That's lean hogs. They're a little easier here today. Quietly easier. Deese, I would have said this is steady a little bit easier, actually. 47 cents lower in the Deese. 71 evens last, 15 cents off of the lows, 75 cents off the highs. So that'll give you an idea of what's been happening there. But we don't even have a dollar range, all right? So that's lean hogs for you, 45 cents lower now. 71.02 is last. Let's go see about your 401k. We finished the market a little lower yesterday, and this is again a little lower here today. Not a lot going on, folks. I hate to say it, but I might smell a little holiday trade starting to sneak in here. A lot of folks are looking to take off. I drove by the Nashville airport this morning at about 4:45, and it was chock-a-block of people trying to get in and get away. So there might be some of that sneaking into these markets. Let's take a look and see how that U.S. dollar is doing. Yesterday we saw yields come in a little bit, and now this is starting to reflect that. It's 223 points lower as we saw that 10-year yield come down from 4.55 yesterday to 4.45. We're still around that level here today, but this is now finally going in that direction where you're going to start to see the dollar get a little weaker. So we're still around 4.45 unchanged, but that's going to be something that we're going to keep an eye on for you. We bring it back here to Nashville where I can say good morning to Suzanne.
Good morning. Happy Friday to you.
There's only one a week. Don't screw it up.
It is this. I always like to say today has been a long week. That's how that works.
Right.
Thank you, Scott.